to focus in on oil and gas. India and Saudi Arabia have signed an agreement to set up a $44 billion crude oil refinery in the western state of Maharashtra. Ajay joins us now with more details on the deal. Ajay, tell us what's the latest?
Good morning, Karunya. Well, it may not be a very stock-moving story, but it's a very big development for the sector. A $44 billion fresh refinery, a new refinery, giant capacity would come up in Maharashtra in the Ratnagiri district, where Saudi Aramco is wanting to hold about 50% stake, and the remaining will be held by our own Indian oil marketing companies, HVAP, IOC. This would have a capacity of almost 1.2 million barrels of processing of crude on a daily basis. In fact, Saudi Aramco says that fast growing energy demand for India is a very big positive for overall global oil and gas sector, and they would like to participate here, and hence they would be keen to put in equity. In fact, they have also said that they are wanting to get in a strategic co-partner, which clearly means that some other global oil giant will also pick up stake, may also pick up stake in this massive refinery. What it actually means, for Indian companies, HVAP, IOC will have more capacity. Not only that, but Engineers India is also one stock which will be in focus, mainly because for any refinery capex in India, Engineers India is the only company, almost a monopoly, which is a consultant for setting up big refineries and how should one go about it, in granular details of setting up of a refinery. So this is actually a big positive for Engineers India. So that is actually also a stock to watch out for in this massive news.
Right, Ajay. Thanks for that update. And while you said that this may not be a stock moving news, we also have some updates from brokerages on the various OMCs. Of course, we know that oil's been on a boil and all the focus has been on this particular space for the last couple of days. What are brokerages really talking about this morning about the Indian OMCs?
So yesterday we saw that about 6 to 8% fall happened as far as the oil stocks are concerned on two counts. One, crude started surging to multi-year highs, and on the other hand, Via put out a news saying that 1 rupee a litre is the kind of government may actually nudge oil companies to absorb about 1 rupee a litre in their marketing margins. They are making almost 3 to 3.5 rupees marketing margin on each litre of fuel sold. So absorbing one means almost a third could actually wipe out. In fact, if you just understand, for oil marketing companies, absorbing 1 rupee in their marketing margins means buying crude $2 higher or more expensive. So that's a very meaningful one. That would have led to almost 10,000 crore loss on an annual basis for all three companies. There was a big denial which came in from most oil companies. We ran the denial of HPCL. But still, brokerages are not convinced on that. This morning, they have come out and said that it may not be an explicit communication from the government that oil companies should absorb that, but in a way, subsidy burden will actually happen for oil marketing companies, and this could lead to derating and earnings impact on oil marketing stocks. So this is a big risk they have highlighted, and that is the reason why there was no recovery in the stock prices of oil marketing companies. So again today, crude oil prices have gone up. So don't be surprised if these stocks come under pressure today as well.
Right. Thanks, Ajay, for getting us a sense of how the market is really reacting to these sets of news as far as the oil and gas space is concerned.